In our previous class, we learnt about the meaning of accounting and the importance of accounting cycle. I told you accounting is the systematic recording of transaction, classifying, summarizing, interpreting and so on. Then I explained clearly the importance and role of accounting cycle. Why is it called as an accounting cycle? Because it is cyclical in process. We start with a transaction, then we start recording, we start with journal, then we post them into ledger, then go for preparation of trial balance, then go for trading profit and loss account and balance sheet. With that we come to opening entries, once again start from journal. Since this is cyclical in process, it is called as accounting cycle. This is what we learnt in our previous class. What is that we are going to see today? We are going to start from objectives of accounting. What are all the objectives of accounting? The main objective of accounting is systematically recording of transaction. Systematic recording of transactions. As I told you, transaction means transfer of money or money's worth. And whenever I told you, whenever if you want to record it, something should happen. So something is happening by way of a transaction. After a transaction take place, we start passing entries in chronological order. That's what I told you the other day. So main objective of accounting is systematic records, maintenance of systematic records. After that, measurement. Primary object of any business is to ascertain whether they are ending up with profit or loss. So it helps in the ascertainment of profit or loss of a business concern. Accounting helps us to find out the profit or loss of a business concern. Then invariably after profit or loss, we go to financial position. Where do we get the financial position of a concern? We get the financial position of a concern by preparing a statement as on a particular date known as balance sheet. So the balance sheet of a concern helps us to find out the financial position of a concern as on a particular date. What does balance sheet consist of? Balance sheet consists of assets and liabilities, which is put in a statement as on a particular date known as balance sheet. It helps us to find out the financial position of a business concern. Then, accounting provides us information. Accounting provides us information to the management. Through management, it goes to administration. For what purpose information is required? To take any decision. Information is required for people to go for any decision. In that way, based on the information provided by accounting, decisions will be taken. In that way, accounting helps in people making decision by providing the required information. Then protect properties. What are properties? Properties are the assets of the concern. Assets are of two types: tangible assets and intangible assets. What is a tangible asset? A tangible asset is an asset which can be seen and touched. A tangible asset is an asset which can be seen and touched. Whereas an intangible asset cannot be seen and touched, it can only be felt. That is the difference between a tangible and intangible assets. What are the examples of tangible assets? What are the assets? Land and building, furniture, sports equipment, vehicles are all examples of tangible assets. What are the examples of intangible assets? Human resource is an example of intangible asset. Goodwill is an intangible assets. So, properties of the business concern has to be safeguarded or protected. How accounting helps us to protect? Because you are making note of all the assets available. At the year end, you may check and come to know what are the assets damaged, what are the assets to be taken care. In that way, it helps us in protection of assets. Then solvency and liquidity. What do you mean by solvency? When can you call a person solvent or insolvent? When a person or when a business is able to clear its debts, it is said to be solvent. When a person or a business is not able to clear their debts, they are called as insolvent. If I am able to clear my debts, I am a solvent person. If I am not able to clear my debts, I am an insolvent person. So, for a person to be called solvent or insolvent, if a person or a business concern is in a position to clear all its debts, it is said to be solvent. If a person or a business is not in a position to clear all its debts, it will be declared as insolvent. Who can declare a person insolvent? Only the court of law. Only the court of law can declare a person as an insolvent. So, if you are able to clear your debts, you will be solvent. If a person or business is not able to solve a debt, they are called insolvent. What is meant by liquidity? What is meant by liquidity? Liquidity means any kind which can be converted into cash easily. Any kind which can be converted into cash very easily. நினைத்த மாத்திரத்தில் பணமா மாற்றக்கூடிய அனைத்தும் in accountancy we call it as liquid. So liquidity is very important. For example, cash is a liquid assets. Jewelry is a liquid assets. If you have jewelry, immediately you can go and pledge or sell and get it converted into cash. So highly liquid. Bank cash in hand is highly liquid. Cash at bank is highly liquid. Jewelry is highly liquid. So what do you mean by liquid assets? Liquid assets are those assets which can be converted into cash very easily. Those assets which can be converted into cash very easily are called as liquid assets. That is the meaning of liquid assets. These are all the objectives of accounting. What are the objectives of accounting? Systematic maintenance of records, ascertainment of profit or loss, enables us to find the financial position of a concern, provides all the required information for the management to take decision. Without past and present information, nobody will be able to make any decision. So it provides all the past and present information for the management to take decision, whatever if necessary. Then protecting, safeguarding the properties of the business. Properties here in accountancy stands for assets, tangible assets. Then solvency and liquidity. I told you, when can a person be called as solvent? If a person or a business is able to clear all its debts, it can be called as solvent. These are all the objectives. Then functions of accounting. The primary function of accounting is measurement. What do I mean by saying measurement here? Evaluation of performances. See, a businessman has to evaluate. No use in going on doing the business without knowing what has been done so far, whether I have gained or lost. So, there should be a measurement. For example, in academics, we go for examination. That is measurement of your performance. Why do we conduct a midterm test, quarterly examination, half yearly and all? That is measurement of your performance. That is measurement of your performance. Similarly, in business, performance is measured by preparing income statements and balance sheet. What are income statements? Trading and profit and loss account, and balance sheet is prepared to find out the financial position. So accounting helps us in measuring the performance of the business. Accounting helps us in measuring the performance of the business. Whether we are traveling in the right direction, whether we are making unwanted expenses, whether we are providing more salary, whether more people are employed. Suppose in the case if 10 people are required, if you employ 15 people, what will happen? So all these things you come to know through accounting. That is measurement. Then forecasting. 2018 sales was this much. 2019 sales was this much. What will be the amount of sales in 2020, 2021? We are able to estimate, we are able to forecast based on our past performance. Based on our past performance, we can come to a conclusion. 2018, we had this much. 2019, this is the amount of sale. This is the amount of sales. 2020, 2021, we can estimate. That forecasting is made by you with the help of accounting. Without a systematic record and maintenance of books, how can you come to a conclusion and forecast? So basically accounting helps you to forecast. Primary function as function of measurement helps in forecasting. Then comparison. We have to go for comparison. If only you go for comparing financial statements, you will not come to know whether you are improving or going down. Even as students, you compare quarterly marks with half yearly marks. Here, we compare the figures of previous year and current year. So, why the profit in 2018 was 50 lakhs and 2019 45 lakhs? By comparing, you come to know that profit has come down. By comparing, you come to know that profit has come down. Then you will start analyzing why the profit has come down. You will go for a meeting. You will discuss why our profit has come down. How can the profit come down? That means something has gone wrong somewhere. We have lost to the tune of rupees 5 lakhs. What is the reason for that? So that discussion, how do you get that discussion? Only by comparing. If you have nothing to compare, how will you come to know? If you have nothing to compare, how will you come to know that whether you have progressed or you have declined? 2017, 2018, 2019. You are comparing. Sales in 2017, sales in 2018, sales in 2019. Whether sales has increased or decreased. This is done by comparing the records. For comparing that, accounting helps you because systematic records are maintained. So comparison very important for us to grow. If you don't compare, you will not be in a position to know whether you have gained or lost. By only comparing, you will come to know whether you are going forward or going backward. Without comparison, that is not possible. So remember, because business is highly competitive. If you want to withstand in the market, you have to go for introspection. You should see that you are in the race. You should see that you are in the race. Otherwise, you will be thrown out of the market. Hundreds of products are available, but we are running well. That means our management is efficient. Our products are doing well in the market. All these things are done and we are come to know only because of comparison. Of course, decision making you know. By doing all these things, decisions have to be taken. Decisions have to be taken. Are we spending on unwanted things? Are the activities productive? Are the activities purposeful? Is it legitimate? All these things you have to follow everything and come to a conclusion. That conclusion is known as decision making. Then control. Control and assistance to government. Where does government come into picture? Government comes into picture because we are taxpayers. We are taxpayers. Whether our books of accounts is legitimate. Are we showing the true figure? That is very important. Are we showing the true figure and calculation of our profit and tax is done in a proper way? That is one of the important functions of accounting. Systematic, we are measuring our performance, we are forecasting our future, we are comparing our past performance. That helps in decision making and control, decision making and control. Then assisting governments, because we are taxpayers. When we pay tax, our accounts should be legitimate. Then importance of accounting. What are the importance of accounting? It helps us to prepare financial statements. What are financial statements? Income statements and balance sheet. Income statement and balance sheet. What is an income statement? Trading and profit and loss account. Trading and profit and loss account are called as income statement, and balance sheet is a statement prepared to find out the financial position of a concern as on a particular date. The result what we get in trading account should be either gross profit or net profit. That is being transferred to profit and loss account, and the result of profit and loss account should be either net profit or net loss, which will be carried to the balance sheet and added with the capital. So, 2 income statements and 1 balance sheet, trading, profit and loss account and balance sheet. Then legal aspects such as provident fund, employee state insurance, TDS. What is TDS? Tax deducted at source. What is TDS? Tax deducted at source. So when source is available, they deduct tax. That is TDS. So before money coming to you, amount will be deducted. That amount is known as TDS. So what is PF? Provident fund. Provident fund is amount set aside from the salary of a person. That is provident fund. Then employee state insurance. If any fatal accident takes place, this will help you. Employee state insurance. Then TDS, tax deducted at source. Then settlement during merger. What do you mean by merger? It can be also called as amalgamation. 2 business concerns joining together. 2 business concerns joining together. We can call it as a merger or amalgamation. They are joining together and becoming one single business. 2 businesses joining together and becoming one business is called merger. So if you go for merger, you cannot fix your value. Your books of accounts will fix your value. I may say so many things, but people value my business based on the assets and liabilities. Every business has got its own value. Every business has got its own value, no doubt in it. But value is fixed based on your assets and liability and the goodwill which you have got. What do you mean by goodwill? The good name, reputation. The reputation of the business is called as goodwill. So, accounting helps us to determine our value. Accounting helps us to determine the value of any business. The value of the business should be determined before going for merger. So, the accounting helps us to know the value of our business. Basically, assets and liabilities, our net worth, including goodwill. Our net worth, including goodwill, gives the value of our business. So, there are so many methods of valuing goodwill, which you will be learning in your higher classes. When you come to 12th standard, you will be learning the methods of valuing goodwill. So, it helps. Which helps? Accounting helps in the settlement of merger, finding the value. I should know my value. Business should attain its value. We should come to a conclusion. These are all the importance of accounting. Then we pass on to branches of accounting. Financial accounting. What all these things have been discussed, so far comes under financial accounting. Comes under financial accounting. Actually, it is historical. People call financial accounting as historical accounting. Why do they call it as historical accounting? Because it is just a post-mortem of what has happened. That means recording what has happened. Nothing more than that. Recording what has happened. That is why it is called as historical. Such type of accounting is financial accounting. Cost accounting. Cost accounting gives importance to allocation of cost. It is more worried about cost, cost wise. That is why it is called cost accountant. If you are interested in cost accounting, you can become a cost accountant by registering yourself in ICWA, Indian Cost and Accounts Accountant. So, cost accountant is always concerned with allocation of expenditure. Allocation of expenditure and cost towards producing a product. Cost accounting is very important because overhead should be taken into account. Are we spending what is required? Are we spending what is required? Or we are going for unwanted expenditure? All these things are analyzed in cost accounting. Then management accounting. Management accounting is a very important aspect because management accounting helps us to come to conclusions. Based on the information provided by all these things, people come to conclusion. It helps the people in management for decision making. So management accounting is different in nature. It is more of decision making. Management accounting is more of decision making. They talk about break-even point. What do you mean by break-even point in management accounting? When your cost is equivalent to your sales. When your cost is equivalent to your sales, we break even. That means we can also call it as no profit, no loss point. Break-even point can also be called as no profit, no loss point. So that means they are breaking even. All these things will be dealt in management accounting. All these things will be dealt in management accounting. Then social responsibility. Social responsibility accounting. See, we are working for the society. Though we are having the motive as profit, society is involved. Society is involved in it. The motive of our profit may be, motive of our business may be profit. In that we have got a social responsibility. So things should not be polluted. Things should not be polluted. We should do business. Our aim is to get profit. But in that there should be ethics and social responsibility. There should be ethics and social responsibility. We have got. So we cannot make things polluted. That we should not do. There should be ethics. Business ethics. We should follow in ethics and see that we give respect to the society. That is the important thing of that. Then HR. What do you mean by HR? Human resources. Human resources. Very important. Of all resources, human resources is the most important thing. Without manpower, nothing is possible. Without manpower, nothing is possible. What does human resources accounting take note of? The amount invested on human resources. Human resources accounting take note of the amount invested on human resources. Very important. So that has to be taken care because people are there whom we have to take care. Are we investing the amount sufficient? Sufficient amount should be invested because human resources, as I said, is the important of all resources. So sufficient amount. At the same time, we have to analyze whether we are investing in excess. That is also there. Two sides of a coin. Adequate investment. Adequate investment is also necessary, as well as unwanted investment also is necessary. Both extremes should be taken into account. So human resources accounting takes into account the amount invested on human resources. This is what you have to understand. So what are the branches? What are the branches of accounting? Financial accounting, which is also known as historical. Cost accounting, always concerned about cost, allocation of expenditure. Management accounting, always concentrates in decision making. Social responsibility. Social responsibility is also taken into account in social responsibility accounting. Human resources accounting takes into account the amount invested on human resources, whether there is an adequate investment or an excess investment. Both the sides should be taken into care, whether it is adequate investment as well as excess investment. That will be taken care by human resources accounting. These are the branches of accounting.